on Libya. Another woman people are paying very close attention to was out there today. Janet Yellen, the head of the Federal Reserve. She spoke before a tiny state's Chamber of Commerce, Providence, Rhode Island. But is it a coincidence that it was on a day where many traders and many investors have already checked out? Take a look at this. April 2nd, 2015. Remember, Easter was April 5th. She's talked about the economic mobility, research and ideas on strengthening families, communities, and the economy. Remember, anytime she gets out there before the Economic Club of New York, she's going to be asked a lot of questions. July 2nd, 2 days before the 4th of July holiday, she speaks at a lecture for the IMF. And then we have April 2nd, 3 days before Easter. That was 2015, a year later. She gives a big speech. So again, once she starts talking and you have anybody there who's going to ask a question, it could move the markets. But today, would you argue that the markets didn't really move much? Because even though she said, are you ready, that we will see a rate tightening this year, we're on track for that, nothing happened with the markets because not a lot of people heard. Well, the Dow strengthened a tiny bit. We can show that after Yellen said we will proceed cautiously with rate hikes. But let us bring in the traders. Guys, let's face it, there wasn't much new here, but no matter what she says, it can move markets. Jeff Cleveland, to you first. The timing, very interesting at best, suspicious at worst, right before a holiday weekend.
Hi, Liz. Well, a little suspicious maybe. I wouldn't make too much of it. I think what really moved markets today was earlier in the morning, the Consumer Price Index, probably the most watched gauge of prices. The core CPI portion of that was up 0.3 of a percentage point, which is the biggest increase in over 2 years, Liz. And I think that that should make Yellen happy. She says in her speech she wants to be confident that inflation is going to head back towards 2% on a year-on-year rate. And nothing could make you more confident than that, in my opinion, than core CPI heading back towards 2%.
Rob,
so
you're on the floor of the New York
Stock
Stock Exchange. When Janet Yellen started to speak, and I always make a notation of these things, the Dow was down 34 points. It's now down 16, even though she said what the market usually hates. Hey, you know what? We are on track to see a rate tightening. And then you pair it with what Jeff just talked about. That was a number from the CPI, the core, which gives us a sense of inflation at the consumer level. And shouldn't we have seen the markets get freaked out? But again, the timing's pretty interesting. But what are the markets thinking?
Well, Liz, I think exactly what you said earlier, which is that the timing of it, it's just a quiet day. You mentioned that it's, some of the market participants have already checked out for a long weekend. I think you're seeing some of that. It's responsible, maybe you could say, for her to come out with her comments today when it's going to be a quieter day. It can be absorbed over the long weekend. There's not really that much going on. Of course, CPI numbers came out, as was mentioned earlier. And it's overall a pretty quiet day. Everything is pretty much on track what people are already thinking, which is that rates are going to be raised at some point this year, and she's going to be slow to raise them further in 2016.
Right, and I think you make an excellent point. She said, while we are on track, we will proceed cautiously. Jeff Grossman, arguably you down at the NYMEX are watching what everybody this weekend is looking at if they're hitting the roads, and that is oil. Oil prices ahead of the weekend. Give us a sense of what was going on, both with gasoline and West Texas Intermediate.
Today turned out to be pretty much a retracement day of sorts. Mainly the dollar, a little strong, made us back off a bit here. But again, as you said, we're going into driving season now, and we're going to have to see, in fact, probably the most crucial thing will be probably the inventory figures, probably of the next 2 or 3 weeks here. That'll give us at least an idea of how this driving season is going to shape up. Even though one weekend does not make a whole season, it gives us at least some sort of an idea how many people are on the road, the kind of consumption we're going to have. And as gasoline goes, so does our market. I think we still have a little bit on the upside. Sorry to say that to all of us. We all should gas up early now, because I think you're still going to see a few more cents on the upside in the coming weeks.
Yeah, I'm the queen of topping off. I'm down 1/4. Forget it. I'm adding in there. Chris, to you, we have Quest Diagnostics, which is on the lower part of our screen, simply because it's spiking on. There was a tweet. Again, these things happen on Fridays right before holidays. Pretty interesting. It involved a possible takeover. That caused a spike. But tell us what else you guys are watching on the floor of the CME.
Well, I think we're going to watch and see what happens Sunday night. They will turn the electronic trade on Sunday night till noon on Monday, even though we're at a holiday.
Tell our viewers what that means.
Well, people will have an access if they want to, if they're worried that they decided they didn't like what Chairman Yellen said, they will have a chance to hedge. So they can either get long or short, depending on how the market's going to react. So that electronic market is a safety valve. If somebody went home this weekend and was long a lot of stock, and now they're worried, oh my goodness, there might be a correction, they will come here to protect themselves with a hedge. So that Sunday night trading should be interesting, even though the actual people won't be on the floor again until Tuesday. We'll have electronic trade. So we'll watch that. We'll see. It was a day where a lot of people weren't here, and I think what the other guy said was correct. A lot of people were already gone for the weekend, and I think Sunday night will be key.
My point exactly, Jeff, that Sunday night, and then, of course, Monday, the markets are closed, but they missed because maybe they were 1 foot out the door, what Janet Yellen said. Tuesday, what do you expect with the trading action then?
Well, Liz, I think the risk that we see is probably a little bit higher interest rates here. Bond investors, when I talk to bond investors, they've been very complacent. They've said to me, well, there is no inflation. But Liz, that is actually not true. We're seeing about 1.8% core CPI year on year. That's very close to the Fed's 2%
by the way,
inflation
the 10-year
target.
yield at the moment, 2.21%, 30-year yield, 2.98 rather.
Yeah, and the move we saw this morning, Liz, was 5 basis points higher on 2-year yields. So we went from about 57 basis points, 0.57 percentage points, up to about 62 basis points. So we did see a little bit of a market reaction in the bond space this morning. Expect that to continue over the summer months, Liz, because I think the low inflation that we've been talking about so many times with you on this show, that might be behind us, and we might see some upward pressure to inflation as we go forward.
Oddly, that is what the Fed wants to see, a little bit of price action when it comes to inflation. Thanks to all of you. Have a safe and happy and healthy Memorial Day.